Hello guys, welcome back to another video in the series of this course for full institutional trading, supply and demand course. So today we are going to be learning about market orders. Okay, how to place orders in the market. So basically how to start trading. Now, so far we have learned about pips, we have learned about lot sizing, we have learned about leverage, we have learned about TradingView, and today we are going to open a paper trading account on TradingView so we can actually start practicing placing trades, because you don't want to, if you don't know anything about trading and you don't even know how to place trades, then you shouldn't be starting out with your real money, because you might place the wrong orders and lose money for no reason, right? So we want to open a paper trading account, or what's called a demo account, and start placing trades until you know how to place trades. And then once we start learning about the strategy on the next video, then you can start placing trades on the demo account, and until you develop an edge, right? And you develop your own strategy, and you make the strategy your own, and then you can start trading, a live account. Then you can open an account with a broker and start trading, a live account after you know that your strategy it's profitable. Okay, so let's jump right in. Okay, so let's say, for example, well, before that, we have to create the account, right? So if we are on TradingView, we are on USD JPY. We're looking at that. This is live price action. So what is a paper trading account? Like I already mentioned, it's a demo account. You get an account where you can place trades, but with fake money. But you will be trading the live market. It's not like you get, fake data or something. No, you'll be trading the live markets, but it's just fake money. It's not real money. So how do we get a demo account or a paper trading account? If you go down here to the bottom, go to this tab called trading panel. If you click on that, right, it's gonna open this window for brokers. Okay, these are different brokers that you can open accounts with. I have a broker with Forex.com, right? So once you create your own live account, right, you will go to one broker, right, open an account, deposit some funds, and then you can link that account with TradingView, and you can place the trades from here instead of going directly doing it directly from the broker website or the app, whatever they use, right? You can trade directly from TradingView, which makes it a lot easier. Like, for example, if I wanted to link my account, I will go connect, I will put my username and password, and automatically it will link my account, and I can start placing trades, using my real money. Okay, but for now, we are going to open an account, a paper trading account. And if you go here to where they have the TradingView symbol, it says paper trading. If you click connect, and then it's gonna open this little window, click connect again, and now we just created an account with $100,000. Okay, now we have an account with $100,000, and this is exactly how your account is going to look when you start trading. Okay, once you have real funds. Okay, but instead of this symbol over here being paper trading, it might say, Forex.com or, Wanda, whatever broker you're using, that'll be the name there. And here will be your name. Okay, the name that you have under that account. Okay, but this will look the same. Now, if we move on to how do we actually buy or sell, how to place orders. Okay, well, to buy or sell, once you have that linked, one thing that you need to check is, for example, to place trades, if I have an account with forex.com, I need to make sure that my feed is coming from forex.com. What do I mean by that? Right? Like when I go to add pairs, if I have a account with forex.com, I want to get the feed from forex.com, right? So if I'm trading the Euro USD, when I look for the pair Euro USD, it needs to be from forex.com. If my broker is Wanda, right? When I'm trading the Euro USD, I have to look for Euro USD and then click on the Wanda Euro USD. Okay? Otherwise, like the feed has to match whatever your broker is. Okay? Right now for paper trading, it doesn't matter, but when you have your real account, that's something that you have to look for. Okay? So right now, let's say we want to trade this USD JPY, right? And this is live data, live market right now. Right now it's Friday, and the market is gonna close like in 3 hours. So I wanted to make this video before the market closes. So how do we place an order? Well, once you match the feed to your broker, if you're trading on a live account, but for now it doesn't matter, right? For paper trading, that's not an issue. You can put whatever feed over here. These buttons, usually they just have an outline around. You'll know you have the right feed once they're turned solid. Okay, once they're solid colors right here, and these are your sell or buy, right? Blue is for buy, red is for sell in the market. So let's say we want to buy this market right now. Okay, for some reason we're looking at this as we're looking at this market, and because of our analysis, we think the market is gonna continue to push up, right? And we think this is a good price right now, and we're gonna buy it and continue going up, right? So we want to click on the buy button. Once we click on the buy button, we're going to have this window open, right? This is your transactions window, and you have 3 different types of market execution orders. Okay, you have what's called a market execution, you have a limit order, and you have a stop order. Now we're going to start with the easiest one, which is a market institution. I mean a market transaction, right? So a market transaction is basically what it says. We want to buy it at whatever the current price is. So if I place buy right now, right? I just place an order for 10,000 euros at the current price. Okay? And now if price starts to go below that order, I'm losing money. If price starts to go above this order, I will start making money. Okay? So simple as that. Okay? So market order is I want to get in at the current price right now. Okay? That's what market order is. That's the easiest, and that works the same even if, for sell too. If I play a sell, I want to place an order for 10,000 units, right? And I'm saying, I want to get in at the market right now. So I just place that order, right? And automatically I'm already in the market, right? And now I'm losing money. If it goes up because I'm selling now, if the market starts to go up, I'm losing money. If the market starts to go down, now I'm making money. That's the easiest way, right? Now here, that's just how you place the order, right? With no, you're just buying, like with no strategy, no position sizing, no, risk to reward, no nothing. You're just placing trades left and right. Now, how do you actually want to place trades? Is you will have a market analysis and a market bias, right? And you will know why. You have to know why you're buying the market at that specific time. So for example, right here, right? Let's say, oh, we want to buy this market because we see this structure over here. Okay, it created a higher high, it created a higher low compared to this one, and right now we're expecting price to never go below this low and for price to continue up, right? And that is the reason why we want to buy this market right now, okay? Because we think price is going to break this high and continue higher. So I want to buy it right here, and I want my stop loss. I want my stop loss to be down here because this is my low. And I don't want price. If price goes below this low, that means there's chances that we're breaking structure and price wants to go lower. All right. So I want my stop loss to be here. I want to enter price at the market price right now. And, I want it to go up. So I'm going to buy it. Okay. So what I will have to do, I have to first really quick find out how many pips this is. This is 21 pips, right? And let's say we're not going to go deep into risk management right now, but let's say we just want to buy the same 10,000 units, right? And we're going to buy. And we're going to buy 10,000 units. But now we know that our stop loss, we want our stop loss to be 22 pips below, right? So over here where it says a stop loss, we're going to check that box. And over here, we want to switch that to this number, right? Which we're going to round it up to 22 pips. Now, 22 pips. Now, for some reason, before we even, we think the price needs to come up, and we're going to take out this highs too over here. Price is going to go above that. Okay. So we want our take profit to be here. Okay. And you can either do the same and find out the pips, right? Or, usually what I do is I just do that, right? I want to take my profit once price goes above that high, right? So I just place a line at that level. So that way I know the price over here, right? I can see the price because it's highlighted. It's telling me where the line is. So if I go to take profit, I'm going to check that box. And then when we go here to price, I want to take my profits this number, right? So 129,918. So 918. And then automatically when I place that, everything is calculated. So it's telling me that I'm risking $17 to make $48. Okay, I place that order and now I'm in the market. Okay, now I'm trading. I'm a trader, baby. Okay, that is how you place a normal trade, and this will work the same with I didn't type the right number, right? So it's a little bit, but we can adjust it by just moving this right to whatever we want it. So let's say we want it right there, and automatically it'll move this, right? So 918, we can go now over here and check it again, adjust it, make sure it's it's what we want it. So that's 129,918, which it's where our line was. And now it says that we are risking $17.17. And if price gets up here, we will be profiting $42.61. All right. We click modify, and now the orders are exactly where we wanted them. All right. And now it's just the waiting game. Now we're just going to wait for price to deliver, right? If it wants to keep going up because of our analysis that we did, price should go up, create higher highs, higher lows until it gets here. And eventually once it gets here, then, we'll be profiting $48. We'll be profiting whatever, we are risking, our risk to reward is, right? our profits will get locked in, and now, that will be a winning trade. But if we were wrong in our analysis, price can just come here and then reverse, and if it hits our stop loss, then we'll be down $17 in our account. Okay, that's how trading works. So now this will work the same with the sell, right? This will work same thing with the sell. Okay, so let's say, for example, because we've been analyzing this chart and we think price is just gonna get here, it's coming here, and it's not gonna go above this high, and right now price is just gonna break down and then continue to go lower, right? And we want to sell this market right now, and we're gonna sell it at this price because we think that is the best price that we can get right now. Okay, so we'll do the same thing. We know we're gonna enter over here, and we want our stop loss to be just above the high to be safe. So that's, let's say we want to make it 12 pips, right? So we go over here. Now we know we're selling the market for the same 10,000 units. All right, we want our stop loss to be 12 pips, right? And let's say we want our take profit to be right here at this low right here. So we want our take profit to be at 128.488. So if we go to take profit, right, click that, 129, that's where price is right now, but we want our take profit to be at this line, so 128.488. okay, so 128.488, right? And then we have our order, everything, we sure everything is great. Okay, and we just place the order, and now we have our order placed, and we are already in the market, but now instead of a buy, we are on a sell, right? Basically what we're saying is price right now is going to reverse, and right, basically what we're saying is if price gets to my stop loss, I will lose $9, but if price gets to my take profit first, I'll be making $66. Okay, so that's basically what I'm saying with this trade. Okay, so now we learn what a market order is. Now we have two other types of orders in the market. Okay, and they're called limit order and stop order. Okay, and these limit orders are for both, right? Just like a market order, it works for sell and buy. Limit orders are gonna work the same for, sell and buy, and stop orders are gonna work the same for sell and buy. Now we want to place a limit order. What is a limit order? A limit order, it's basically, we're saying that price is gonna get to this point and then reverse. So if price is going to one direction, right? In this case, right now we're saying, oh, price is going up, right? But we want to sell the market. We think the market, for example, is going to, because of our analysis, we think the market is going up, is going here, coming down, and it's going to get to here, and then it's going to break structure, and it's going to do this, right? For some reason, that is our analysis. So we want to, because we know that, for some reason, we know that price is going to come up here. We would like to place a sell order, limit order, up here. Sell limit order. Why? Because we think price is just going to go up here, and from there, it's going to turn around and collapse. So a limit order on a sell, we place it above price because that's going to be the limit where it's going to get, and then turn around and go the opposite way. Okay. So for a sell order, right, it's above price. Now it works the same for a buy. right? Now, if we were buying this, let's say prices up here, but we think that this trend is going to continue, right? It's going to do this, right? And then come back here and continue, right? So once price gets up here, let's say once it starts to break down and come down, we want to wait, or even better, so I don't make you, so I don't get you confused. Let's say price is right now right there, right? But for some reason we think price is gonna come to down here, okay, to this low, and then continue up, right? We think price is doing this right now, right? And then is going to do this, right? Continue higher. So what we're saying is we want to place an stop order, a limit order, a buy limit order here, because price is just going to come here and then turn around and continue in that direction, right? A limit order for a buy, it's below price. A limit order for a sell, it's above price. Okay, so what we're saying is price is coming in one direction. This is the limit where it's going to get to, and then it's going to go in the opposite way. For a sell order, price is going, in the up direction, right? It's going up. I'm going to place my order above price, because what I'm saying is price is going to get to this limit order, and then it's going to turn around and go the opposite way. It's going to start selling, right? I want to sell it over here because this is the limit where the market is going to get to, and then it's going to go down. Buy order, market is going down. This is the limit where it's going to get to, and then go the opposite way. So let's see for this. Sorry. So let's say for this buy order, how we will place this buy order. So let's say we want to place our buy order right here at 129.010. Okay. So we'll place buy, and we want that order to be at 129.010, right? And then we know, because of our analysis, that we don't want price to go below this low, because if price goes below this low, that means it's a breaker structure. That's our analysis. Okay. So we want our stop loss to be right below that low. So let's say it's there. So our stop loss is going to be 15 pips. So we want to enter. Our limit order is going to be at 129.10. Okay. Then it's going to be an order for 10,000 units. And our stop loss is going to be 15 pips. And let's say, because our order is down here, our stop loss is here, if this trend is going to continue, it's going to take out this high. So let's say we want our take profit to be this high, right? So our order is going to be here, stop loss is going to be here, and our take profit is going to be here, right? To continue up, right? To continue a trend continuation. So we want our take profit to be at 129.466. So our take profit is going to be 129 point, what is it? 466. Okay. So now we have this order all dialed in now, which is place order. And now we have all our orders set up in the market. And now we just wait, because now we're just expecting price to, we're waiting. We're expecting price to keep going lower, right? Top us in, put us into the market, never go below this low, and then continue up, right? And if that happens, we'll be, if price gets up here, our take profit is gonna get triggered, and we're gonna make $35. And if it goes down instead, and it keeps going down, that means that'll be a loss, and we'll be losing $11.60. That's how we place a limit order, okay? And it'll be the same. It'll be the same for a sell limit order, it'll just be the opposite way. I'm sorry for my voice, guys. I've been a little sick, but I'm still trying to get this video out for the weekend. Okay, so for, let's say, we're just gonna cancel these orders right now, and now let's say it's a limit order, right? So let's say it's now we want to sell it, a sell limit order. So now let's say this is our analysis. Price is gonna get there, it's gonna break structure, and then go down, right? So if price is down here, this is the max where price is gonna get to. So let's say I want to place my order right here, and I want to place my stop loss basically up here, right? So I know my stop loss is going to be 17 pips. Okay, so my order is gonna be sell, and it's gonna be a limit order, right? I want to place it above because price is not there yet. So I want to place it above price because price is just going to get there, and then reverse, right? So I want my limit order to be at 129.493. 129.493. Okay? And then I want my stop loss. We said our stop loss was going to be 17 pips above that. So we know that it's going to be 17 pips above that. And then our take profit, now let's say it's this low, right? And now our take profit is a 128.867. 128.867. Okay? And now what we're saying is we have our order dialed in, and we know that our stop loss is 17 pips, and we'll be risking $13. And our take profit is going to be 62 pips, and we'll be making $48 if it hits our take profit. We place that order, and now our orders are all in. And now we have that if price comes up here, it's going to put us in the market for 10,000 units. If price continues and it hits our stop loss, we're gonna lose. We will lose those. What was it? $13. But if it goes to our take profit first, we'll be making those $48. Okay. Yep. 48, 41. Okay. So that's how you place limit orders. Okay. Now we'll close this, and we just clear this. All right. So now we learned about market orders. We're going to get in right where price is, right? And we set up our stop losses and our take profits. Now, limit order for a sell, we want to be above price because we're saying, oh, price is just going to get there and then reverse, right? For a buy, we place it below price because we're saying, oh, price just gonna get there and then also reverse to the upside, right? Now, the last order are going to be stop orders. Now, stop orders are basically, what the name says. It's a stop in price and then continue, okay? So kind of like the opposite to limit orders. So limit orders, basically, I was saying limit orders, we wanted to price to get to our order and then turn around, go the opposite way. Now for stop orders, basically we want price to get to our order, a stop to put us in the market, and continue in the same direction. It's going to be a continuation order, right? So for a buy, if I wanted to, place a buy order, I will place it above price, okay? Because what I'm saying is price is coming this way, created a higher low, and then I'm expecting market to continue higher, okay, to break this high, okay, so to continue the same uptrend, right? So I'm saying once it goes above this high, I want the market to put me in, right, and so I can start making money on the upside, right? So stop order, price is going in one direction. Just wanted to stop so I can get in, so it can put me in the market and continue in that direction. All right. And for a sell order will be the same. For example, right now, let's say our analysis is that this market from here is going to continue lower, right? That this market from here is going to continue lower. Okay, so I want, once it breaks this low, it already broke structure, so I want to get in the market right away, right? So I want to place the order over here, and my stop loss will be up here because the market is already going down. I just wanted to stop, put me in the market, and continue, right? That it's a continuation order. So it's a stop. It's just a quick stop. Market is going in the same direction. I'm saying price is going to continue. I just want to get in the market and put it above this, above price, so it can continue in the direction. So if it's a buy order, I'm going to put it above price so I can continue in that direction. If it is a sell order, I want to put it below price so it can continue in that direction. Okay, so let's place a little example over here. Let's place a sell order, right? Have a sell order, and let's say we want to make, we're going to get in the market as soon as it breaks this low, because that will give us a confirmation that it broke this low, and then now it's going, it's a bearish market, and we want our stop loss to be above this high, right? Because if it just breaks over here and then continue and breaks this high, that means I was wrong about my prediction, right? So same thing, we find out how many pips this is, and it's 32 pips. So here when I stop order, right? Because I put a market order. So and that's why, even to me, sometimes I forget, right? And you want to make sure, that's why, to get this down when with fake money, because just by us placing trades, we already lost a lot of money. So you don't want to be losing money while you're learning this. That's why you want a paper trading account to learn all this, how to place trades, right? So we say that we wanted our order to be a stop order, sell, stop order, and then we wanted to get in at 129, 149. Okay. Our stop loss, we had said it was going to be 32 pips. 32 pips. And our take profit was going to be 128, 490, 128, 490. And now place a stop order. All right. And now we are in the market. So basically what we're saying is price right now is here, right? But price should continue to go down, put me in the market, maybe have a little retracement, right? But never go above this high, and then continue delivering down until it hits my take profit. And this will be a profitable trade. That is what I'm saying. So a stop order continues in that direction, puts me into market, and then continues, right? And this will be the same if we do a buy order. Okay, so for a buy order, let's say our analysis is this, a buy stop, right? Price is doing this, right? This is our analysis, this is our bias. So price right now is here. So we're saying that as soon as price breaks above this, right? Breaks above this high, we're gonna get in the market and then continue, right? So we can start making money to the upside. So we'll want to place the order here, and we want to place our stop loss to be below this low, because if it breaks below, then I was wrong about the analysis, and price might want to go bearish instead of keep going bullish, right? So let's say I want to place my order over here. So I will go and measure how many pips this is. This is 33 pips. And then now I know I want to place a buy stop order. I want my order to be a 129,471. 129.471. Okay, for 10,000 units. My stop loss, I want it to be 32 pips, or it was 33, right? And I want, let's say I want my take profit for whatever, let's make it, 50 pips, right? I want to place that order, and boom. Now I have a pending order, right? A buy stop order up here because price is below. So once price breaks through this line, it's gonna buy me 10,000 units and then continue going higher. That's the expectation. It never come below my stop loss, because if it goes to my stop loss, then I'll be down $25. But if it goes and hits my take profit, I'll be up $38. Okay, so those are the three orders. Those are the three ways to place orders in the market. So once again, a quick review. We said we said that a buy order is going to be, let me cancel this. Okay, so a buy order, we are going to get in right at price. We're going to set up our stop loss and set up our take profit, okay? And we're expecting price to never get below here and continue, right? That is a market order. Now, a limit order, if it is a sell limit order, we have to place that order. It has to be a short position above price, whatever we think price is gonna get to, and then reverse, right? Let's say I want price is gonna get to 129.492 and then reverse, right? So set up my take profit, set up my stop loss, whatever I want it, and what I'm saying, and now it's just wait, right? And I'm just waiting on this order because price is below. I'm waiting for price to get here, do whatever it wants to do, and then collapse, right? And the opposite is true for a buy limit order, right? If it's a buy limit order, we are taking a long position, and let's say for some reason I'm expecting price to go down here, right, and never go below this low, and then continue to the upside again, right, and take out the height to continue the trend to the upside. So I'm just gonna place this order here, wait for price to come down, tap me in, and then continue higher, right? That is my idea. That is the idea of buy limit, sell limit. It's to the upside, right? And then we said then the last order is going to be a stop order, right? If it's a buy stop, we want to place it above. If it's a buy stop, we want to place it above price. Set up our stop loss below the last low, right? And then we expecting price to continue higher, right? So we're saying price, it's just gonna, right now from here, it's just gonna run, right? That is a stop order. And then a sell stop order is the opposite. We want to put a short position below price, and we're saying price is not gonna go above this high. Price is just going to continue going lower, right? And then it's gonna put me in the market and then continue going lower, right? Until it gets to whatever my take profit is, right? Those are the three types of orders. I hope I made it clear. And that's all for this video. I hope you guys are enjoying this content, and please don't forget to subscribe, like the video, leave your questions in the comment section. I'll try to answer every single question, and we'll see you guys on the next video. Next video is gonna be saucy, guys. Next video is going to be the introduction to market structure, and market structure probably where I spend like the next 4 to 5 videos just going deep into market structure, because that is the root of my strategy, the strategy that I use, the strategy that is making me money. So see you guys in the next video, and have a nice weekend or day or whatever, whatever you are.